What is going on, everyone? Welcome back to another video, another day, another dollar. We're going to be breaking down our futures contract per usual. Today was a very choppy, kind of lackluster day. Decent range, not the worst, but nonetheless a very choppy session, as you can see by all the back and forth action that we had here on our 30-minute profile. And something that you may notice, I have labeled my time frames, not all the time frames, but for those of you that know what an actual market profile looks like, it's typically labeled A through M. You have 13 time frames in the day. And so today I just labeled the ones that I kind of want to touch on A through M. So I labeled A, B, C, H, I, and M periods. This allows me to kind of better explain a certain time frame and better organize things. That's the whole purpose of the whole purpose of profile when it was designed was to better organize the data that you see. So for me, I don't have the money to afford an actual profile, so I just use TOS 30-minute time frame with a volume profile that can show me value, and then where half back is at, and then I like to label from time to time A through M what my time frames are, so I can better understand things. So for me, a lot of times my charts just kind of look like this because I've gotten used to being able to understand where things are. But in the beginning, I labeled each and every single one of my time frames, 30-minute time frames, A through M, ignoring the N period, right? The after hour period. So let's go ahead and dive into today's video. I'm going to talk about, I'm going to touch a little bit on what I discussed in yesterday's video. I gave out two scenarios. So I'll zoom out here in just a second, but I gave out two scenarios on what it could look like if we had acceptance below the 72 level. And I mean, look at where J got right up to 71.75. So I said if we had any acceptance below 72 and found acceptance in the lower distribution from this big liquidation day down, right, that's 72 down to 48. If we had any acceptance within that range, you would go and get these other daily lows. And guess what? We did exactly that. We go out with, I'm not sure how wide. Let me count here. 1, 2, 3, 4, 5, 6, 7, 8, 9. We have a 9 wide point of control, believe it or not. So 9 out of the 13 time frames traded back and forth through C's high of 56.25. And then we go out with a price probe. No afternoon rally highs, no nothing, just the day's high and the day's low with a price probe and a 9 wide point of control. So why are things like points of control something to be notified of, and so on and so forth? Well, we'll discuss that in further detail. But real quick, I just want to go over those scenarios that I gave out in yesterday's video. So just real quick, I said in yesterday's video, this area right here was going to be an area that I wanted to keep an eye on. All right. Said if we found any acceptance, right? Yesterday, we were one time framing down the daily. We began to put the weekly back into an initial 3-week balance. That balance is still forming, and we'll look at that on the weekly time frame here in a little bit. So stick around for that. But I was saying if we found any acceptance below the 72 level, right, we would and find acceptance in this lower distribution, we would go and trade down at those daily lows. We would get the 55.50 level, and then we get that daily low of 48, and then so on and so forth, and begin to get into this other distribution day, this double distribution day that we had from here, right? We had a double distribution day on this day, and that kind of looked like this, right? So we would begin to get into the single prints, and we'll discuss that in further detail here shortly. But we would go and initially get these other daily lows and then start encompassing that other weekly range that I was looking at in the larger picture. So the other scenario I was suggesting was a scenario like we had here, right? We got into that lower distribution, rejected out of it, brought value from lower, overlapping to lower to higher, and then we began to one time frame up again. Same thing was before today, we dipped our toe into that range yesterday, dipped our toe into that lower distribution, and we were just kind of like, all right, are we going to do the exact same thing? Not find much acceptance below that 72 level and reject out of it, put ourselves back into a 3-day balance. But like I said, we had to respect market generated information, and market generated information at the time was telling us that value is going lower, right? Value is being brought lower, and we are one time framing down on the daily, right? Since we broke out of our balance, we've been one time framing down on the daily, 2 days in a row now, targeting these other lows. So in the short term, market generated information favored the sell side. So selling on pushes upward was definitely the play today. So those were the two scenarios that gave us yesterday's video, right? And it played out to a T. That 72 level turned out to be a very, very key level as we pushed right up to it once the Fed minutes came out. And I forgot to mention that yesterday. We did have Fed minutes that came out at 2 o'clock that caused a little bit of volatility. But nonetheless, guess what? Price action rules. We have value that's overlapping, or excuse me, have value that's completely lower, and we stayed within that value area for the most part, right? We kept rotating back to this 56.25. So fading the edge or the extreme up here would have paid. However, it would have been dangerous due to the volatility. Typically, increases a lot more during that time whenever the Fed minutes drop. Obviously, you can tell by all of J's range. Let me go ahead and pull up these destinations. But all of J's range, you can see, was pretty much the entire day's range. We took out the high, got close to taking out the low in one time frame. So it just goes to show you how strong that range was. Something I do want to discuss as well is initial balance. For those of you that are not familiar with this term, initial balance is going to be the first two time frames of your day, the first two 30-minute time frames of your day, or whatever time frame you'd like to look at. But for the profilers, we like to look at the first two 30-minute time frames of the day. So that would be A and B periods the first two time frames of the day. We opened with a gap, pushed down lower, right? So we continue to one time frame down, and then in B period we opened up, came up, filled that gap, got into the previous day's range, and then rejected out of it. Once again, that 72 level up here, right? That 72 level playing a factor. 72 level was playing a factor in that. Obviously, value, we never even got close to it, and we didn't find acceptance. And then guess what? We took out A's low, getting the other low of day down here at 47.55.50. So I'm going to go ahead and mark out these destinations real quick. So now that we know where our initial balance is established, let me get rid of this. Mark our initial balance right quick. Now that we know where our initial balance is established, typically in a market that is one time framing down, you want to go with what the market generated information is telling us. So I'm just going to mark B's range. All of B's range essentially was the initial balance, right? That would be the initial balance because it overlapped A, and it's the first two 30-minute time frames, right? So the first hour of the trading day balance. And usually, whichever way you take out, or whichever side of that balance you take out, typically you go with it on the down or the upside, whichever way you take out. So in this case, we took out the initial balance low, and because the market is one time framing down on the daily, the value is overlapping, or not overlapping, the value is lower. We had a gap, it got filled, but then we rejected rather aggressively out of the previous day's range. You could have shorted in C period to go and get that initial balance low and then get this other daily low, right? You knew that the next target on the downside, besides the 55.50 level, if you were watching my video and you marked these destinations yourself, is going to be the 48 level and then that 46.25 level. Those are going to be your next two downside destinations. And then you start getting into that single print, right? Into those single prints on the downside. So today we got that, took out the initial balance low, but then things got very tricky. We couldn't get back to the low of day. All right. So this is where you got to start being careful, because then we have things like V-shaped recoveries that like to happen where the market gets too short. All right. Everybody that was shorting down here, they begin to get stopped out, or they don't really like their positions. Then you have momentum buyers stepping into the market, squeezing the shorts out, which caused this big push up in H period. Now, this is where I got involved, okay? Because of all the information, all the market generated information that we had at the time, I didn't think that the market would run away to the upside, get back into the previous day's range, and take out the initial balance high prior to the Fed minutes coming out, okay? So for me, it was a good opportunity to get short against B's high and against that 72 level that I was, my line in the sand for the day. So I got short on the push up here. I was short 64, a 5 lot of MES. Like I said, I'm trading small, just trying to keep the head cool. And then I added more on the way up at 66. Didn't quite top ticket, which doesn't matter. However, I did hold on to the position, and I was just looking for us to rotate back in to around the 70 or the 59 level. Okay, half back at the time was right around 58, and the point of control was still down at 56.25. So I was just initially looking for us to get back to 59. So that was my out or my target, and then my out was above 72 at 73.25 is where I had my stop. We came in, and I got out of the trade for a nice 45-point gain. You can see, or excuse me, 47.5. So 47.5 points on the downside is what I made, roughly $237 on the downside, which is a great trade. I was very happy with that. And then obviously we had the Fed minutes and J period. Did not want to trade that, but you can see we took out both sides in the initial balance by getting the upside initial balance, but still holding below that 72 level, rotated over, and then came back down. So if you faded up here, yes, it was dangerous. However, it did pay because we created new lows on the day, probing late in M period. So basically a nothing day, but there were opportunities to trade. And yes, you could have bought down here at the lows. Nothing, because we were rotational and it was a bell-shaped curve, you could have definitely bought, excuse me, throat's dry. You could have definitely bought, 48 or 50s and then had your stop below 46, right? You're risking 3 points to the downside. And then maybe you're looking to rotate up to 56.25, which is where point of control is at. Okay. And half back was around at 58. So you're buying 50s, risking 3 points to the downside. And then you're making 6 points. So good 2-to-1 trade, right? You're looking for a good trade to the upside there. But the better trade is definitely the short because of the market generated information that we have at hand. Market is one time framing down on the daily. We have value that is lower, and we've been bringing point of control lower as well. So, yeah, that's that's today in a nutshell. I'm gonna go ahead and mark these destinations real quick, and you guys will see it here in just a second. All right, so there you guys have it. Here's our destinations. So we have today's high at 47.7175. Okay. Then we have our 9Y point of control at 47.5625 right here at C's high. And then we have our price probe at 47.4650. And then today's low of day at 47.41. Now on the downside destinations here, we have 47.3725 back from this trend day. Let me zoom out here. Back from this trend day up, right? So they become destined as there was something to lean against, right? That structure was something to lean against on the way up. It is a destination on the downside to fill. So your target is going to be 47.3725, which is going to be a very, very key level to hold because that was the lower portion of that upper distribution from that time, and that caused a pretty good support area. Right in this range, caused a pretty good support area to reject out of and then push up higher. So that happened back on these days here, back from last year in December 14th and December 15th, which helped cause this market push up. And then even when we had this big liquidation down, we got back into that upper distribution, rejected out of it, and then continued to push up. So same area here. However, majority of that has been eaten away at now, and it's more or less looking like less support is there. So downside targets there at 37.25, 34.75 is where that set of single prints fill. And then we have a very large set that start at 27 and fill at 47.0875. And then you have the lower distribution from that day down here that starts at 0875 and the lower portion being at 96.75. So that will be your next downside targets. Not really looking for us to get there, not looking for this market to liquidate as heavily. However, for the sellers, they want to open up below this price probe. Okay, the most positive thing for sellers is to open below this price probe. That is where the market, kind of spiked from and made lower lows late in the day. So sellers want to open up and find acceptance below 46.50. If we open up above 46.50, you will go trade at 56.25 and then potentially get our high of day up here at 71.75, which looks good for the buyers because we are right at our 20-day moving average. If we look at the larger time frame, you can see here on a larger time frame that we are at our 20-day moving average. Okay, so 20-day moving average. This could cause a bit of an issue for the sellers on the downside. So if we open above, like I said, we open above that 46 level, you go trade at 56, and then buyers want to take out today's high to put ourselves into a balance, right? We continue to one time frame down, so it's breaking out of this balance to the downside, right? We took out 84.75. If you sold 84.75, you're in the money pretty good, roughly 40 points on the downside. So you would probably be covering here at these lows and then at that 20-day moving average. All right. Now, from a weekly standpoint, let's go ahead and look at our weekly. Our weekly balance is still forming, right? I'd been looking at the market to pull back for a little bit on the weekly time frame, as we had been one time framing up 9 weeks in a row. I looked back at the data. 9 to 12 weeks was about the longest run, all averaging from 15% to 20% on the upside. And we were right around the 9-week mark, 16% at the high from the low. And we finally got our pullback. So if this market continues to pull back into that first week of December range here, if the market does continue to pull back into that range right here, we will begin to incorporate this weekly time frame as our balance. So, but still, just initially, it's going to be just this area here. We're going to be using, so far, if today's low holds, we'll be using that, and then the previous week's high would be our balance area, right? So buyers need to hold. Okay, buyers need to hold today's low at 41. If they do not hold today's low at 41, we continue to one time frame down on the daily, and it's not over for them. However, they will begin to start liquidating more and more as we begin to put more and more buyers underwater and under pressure. So with that being said, ladies and gentlemen, I hope you all have a wonderful day. If you did learn something or you enjoyed the content, leave a like down below. If there's more that I could help explain, leave a comment down below. If you'd like to learn more besides just me and look at a better picture of the market profile, go check out Paul Asmar, as he is my mentor and great trading guide, as well as his trading room. Go check out camelbacktrading.org if you guys are interested in joining a great room of traders. We'll catch you guys in the next one. See ya.